Are you tired of worrying about your 2023 farm profits? Take control of your investments and maximize your returns. Let Advanced Trading help you create a marketing strategy to protect your investment and reduce market risk. For over 40 years, Advanced Trading's non-predictive approach has helped farmers secure and extend profits regardless of market volatility. Our team is positioned to help you make the most of 2023. You never stop working, and neither do we.
Good morning, everyone. Tom Grisafi with Advanced Trading. Let's take a look at this number. We had a USDA number today, and we came out with some bullish results. Take a look at the prices real quick. No beans up 30, last 12.83 as we speak. Dees corn 4.95, up 6, close to up 7 cents. Dees wheat up 13. Those are the markets as we speak live. Big report. Hopefully my friend Brian Basting will be joining me shortly, and he could talk more about the numbers.
You bet, Tommy. I'm here.
Very good. What'd you see out there, Brian?
Well, it was a surprise, Tommy. You know, the yield, particularly for beans, down a half bushel from last month. The trade wasn't looking for that much of a cut, Tommy. It was only looking for a cut of about 1/10 of a bushel. So the USDA took a half bushel off the national average yield down to 49.6 now. It also took some numbers worldwide down, and the bottom line was the world soybean stocks, Indian stocks for this crop year, Tommy, were down nearly 4 million tons from last month. So the bean market has definitely got an underpinning in it from that, primarily, of course, again, from the USDA lower U.S. yield. But I would add, though, that the USDA did cut the soybean exports by 35 million bushels in this report. So a little bit of a warning sign out there that the USDA still believes that the U.S. is going to face stiff competition in the export market this coming year. For corn, briefly, Tommy, the USDA did cut the corn yield by 0.8 of a bushel. They cut it down from 173.8 in September down to 173 this month. So we did see the crop size decline. We did see the carryout decline, Tommy, about 100 million bushels from last month. So we're still looking at a 211 carryout for next year, for this current year, 23-24. That's down 110 million bushels from last month. But again, another yellow flag, if you will, Tommy, that they did cut exports 25 million bushel. They did reduce feed use 25. So kind of a mixed bag, but overall definitely supportive relative to trade expectations.
It's really interesting, Brian, because when markets go down day after day, and beans have had a heck of a down move, we have November options that expire here next week. So that's really in play. I know a lot of Advanced Trading customers have a put on. They were looking for this rally to make that sale. So we're right at the point where we're about 50% through harvest. That, as you know, is that gut slot where people either decided they had space, they don't have space, they had forward sales, it's going to town, it's not going to town. As we speak, soybeans are up 37. I have to look right in the camera and ask you, are the lows in? I wouldn't do that to you. But you know, that's what people want to know. And if they drop a comment below or give us a call, maybe we could help them work through that. Hey, don't forget to hit subscribe to the channel. But Brian, I wouldn't do that to you. I told you I was going to play that joke on you. Are the lows in? I tell you what, we're not any closer to making new lows. Soybeans up 38, corn up 8, wheat up 13. But let's be realistic here, Brian. We're having a heck of a rally today. Corn has a 4 in front of it. And all the years out barely have a 5. Dees 24, Dees 25, Dees 26. Before the report, I looked at all the spreads. And what are the spreads telling us, Brian? If we break it down real quick, I was saying before we went live on the air, but I was already on the air. I have to leave here by about 11:40 to go over to RFD TV and talk with our friend Scott, the cow guy. But if the spreads could come through this camera and talk to a farmer, what's Novjan bean spread telling you at minus 19 cents here as we go into this report?
The market is encouraging producers, at least relative to recent years, Tommy, to store. That's a pretty good carry relative to recent years. You know, nearly 20 cents a bushel, as you said, to January futures from Nov to Jan. About 15 to 16 cents from December corn to March corn. So what I'd remind the viewers, though, is while the market's encouraging producers to store, there's only one way to guarantee, if you will, that price, that deferred price, again, which is higher than the nearby price, is to lock in that price. Now, there's a lot of different ways to do that in terms of risk management, whether it be a forward sale and a purchase of a call simultaneously, whether it be an HTA and a purchase of a call simultaneously, One other alternative might be to purchase a put option, for example, for the March futures. Regardless, what I'd remind the viewers is, typically when you have a building carry, which we have at the moment, and the supplies are increasing, Tommy, that's when the market will offer a higher price for the deferred. But oftentimes, we've seen in history, as time goes on, when supplies are building, that deferred contract will work its way down to where the nearby contract is trading. For example, not a prediction by any means, but let's say December corn is at $4.95 today and March corn's at $5.10. Historically, what could happen would be that the December contract would expire and the March contract would grind lower to $4.95. And we don't have time to go into that in depth other than to say that supplies are building. At a carryout of 2.111 billion bushels, Tommy, it's up about 50%, more than 50% from last year's 1.361. That's on corn, so we've got a real good carry there in the market. For beans, the situation is a bit different for the moment, Tommy. 268 carryout for old crop, 220 is what the carryout is for new crop. So what I'd encourage viewers to think about, producers to think about at this point is, how do I get control of these 2023 bushels that I've either just harvested or I'm getting ready to harvest? How do I get control of those bushels? By that I mean get a floor underneath the market. You mentioned a moment ago harvest lows. I don't know either, Tommy, if those lows are in. But what I'd encourage viewers to think about is, how do I defend my balance sheet if the lows are not in? And if they are in, Tommy, how do I take advantage of it from the upside? There's tools available, marketing tools available, risk management tools available to accomplish that goal.
You bring up a great point. We're going to run out of, we have that floor, that put from the United States government, that crop insurance, that's going to end October 31st. And we're going to go about, what, 3.5, 4 months till we get that next February crop insurance level and for the 24 crop. So there's that time, Brian, in the history of myself trading at the Board of Trade, that we get to this point where we feel comfortable, where we get a rally like we are today. Soybeans up 40 and we say the risk is over. But you got to think, folks, you got to think what's going on. We got Ukraine invaded. You got Russia, Ukraine fighting. We have what's going on in Israel and the Gaza Strip now. We still have that in the back of our mind. What's going on with China and Taiwan? Is that the real trifecta? All these people fighting with each other? There's great risk. You know, Brian, something happened this morning. You and I talked about it off camera. We had a CPI number, and I can talk about interest rates because I stood in the 10-year note pit at the Chicago Board of Trade for many years, and I still have a full seat there. Well, all these shows like ours are going on, and thanks to the 75 people watching, we appreciate it. But you guys are all wanting to hear about grains, and the bigger story is the bond market. And what's happened in the bond market the last year, if you would have watched ATI USDA live report a year ago and what we're doing today, we're talking about how great it is that the markets are up, but there's something else that's up tremendously. Just last week, Brian, the 10-year note hit 4.70. Doesn't sound like a lot, but when you add what prime is and then operating, when you factor in your numbers of interest costs, just run through real quick, approximate numbers on, if you're going to do that sell or store decision, how much that levels went up in the last year. Brian, back to you.
You hit the nail on the head, Tommy. If you're looking at, for example, I'll use a round number, $12 bean off the combine here. It's a bit higher today, needless to say, than it was that, but I'll use $12. If you have a 9% note, that's about 9 cents a month per bushel that you're going to be having an interest cost alone on every bushel of beans. For corn, it's closer to 3.5 cents a month on 450 beans, cash corn. So you're looking at interest costs, Tommy, that we have not seen for many years. So that's another thing to consider when you're looking at the storage decision. Not only the carry in the board, but some of that carry in the board, Tommy, has been offset by that interest cost, if you will, or challenged by that higher interest rate. Interest rates we haven't seen for quite a while here. So it's something that factors into the decision. This is where it's very important, Tommy, for a producer to sit down with a trusted risk management advisor, such as yourself, and let's go through this point by point. Let's go through our on-farm storage availability. Let's go through if we decide to take some to town and sell it, call option, volatility, all those things play into it. Interest costs, as you highlighted very well a moment ago. But the critical thing, Tommy, is now is time that you know how many bushels you have. And you make a very important point. On October 31st, Tommy, the insurance price will be set, and you either will get an indemnity or you won't get an indemnity on your farm, but there will be no more backstop from the insurance, if you will. At that point forward, any unpriced bushels are vulnerable. Yes, they can go higher, price can go higher, but there is no more backstop. The backstop right now is through October 31st, is crop insurance, but that disappears, as it were, on October 31st. So get control of those bushels for 23, and I don't think it's too early to start thinking about 24 earlier. You made a good point, Tommy. We won't have the 24 crop insurance base price until February of 2024, 4.5 months away.
Yeah, it's interesting. A lot of things can happen then. There's been some people, Brian, and I spent a lot of time in Iowa during those 2 hot weeks in August, and there's just felt like a whole hot summer. But how amazing is it that we produce this many bushels with how adverse the weather was? So the Tommy Grisafi speech, looking in the camera, would be, listen, I was there. I watched how dry it was in the spring. Maybe they were right. Plant in the dust, the bins will bust. They didn't quite bust, Brian. And I think that 49.6.7 number in beans is telling you that. But think about the adversity we had in getting this crop planted, how dry we were. Listen, there's a reason the Mississippi is almost out of water. It's not because it rained too much in the center of the country during the year, but we still grew this many bushels. So my message to everyone is, if South America puts in a big crop, and they got a lot more room in America, we're losing ground to dollar stores and homes. In South America, they can plant a lot more acres. And as that price rose, look what happened to wheat. Look what happened to wheat, Brian. The prices we had to how bad demand is, even at wheat at these levels. So, be cautious, because South America is coming after us. Unfortunately, and the numbers better than I do, we are no longer the #1 exporter of soybeans and corn worldwide. Is that correct, Brian?
That's correct, Tommy. We haven't been for several years on beans, but now we are no longer forecast to be the #1 exporter of corn for 23-24, replaced by Brazil. And I thought you summarized that well, Tommy, in terms of South America, because they are planting the 2023-24 bean crop and corn crop in Brazil as we speak, and they'll plant the Argentina crop also later this month. All those things are in play here now when we look at 23-24. So a producer has to keep in mind that the world market is going to be looking now towards South America. But I'd add one more point to your comment earlier. Not only the genetics help pull us through in 23-24 in terms of these surprisingly good, not stellar in some cases, but surprisingly good corn and bean yields, but the American farmer, taking advantage of technology, embracing farming practices, has really done a terrific job. And this is a year where those factors were put to the test by Mother Nature. And I think overall, producer came through with flying colors.
I got to look right in the screen and say, today's National Thank a Farmer Day. So thank you, farmers. Thank you, clients. Thank you, Mr. Brian Basting. Before we end it, Brian, is there anything besides that bean number? We're still up 36 cents. I imagine we're going to see some selling going into the close. It just makes sense. By the time we send out our text, emails, whatever, hey, beans are up 40. If you need cash sales, get them on. Was there anything in that number that you're like, wow, that was the real shocker? Or was the bean number that much that the yield's down, yet the carryout's not that much down? Is that really the gist of this report today?
I'd remind viewers, Tommy, that we got one more report in calendar year 2023 here, and that's in November. That report will probably encompass 90% of the bean harvest, as fast as this bean harvest is going. So that number is not carved in stone, that 49.6 national average yield, Tommy. Yeah, it could go lower, but it could go higher in November. So be a student of the market, take advantage of opportunities, work closely with your trusted risk management advisor. There's so many things that can change, but we definitely got some favorable news today in terms of the beans especially.
Well, Brian, I want to thank you. I want to thank the whole staff. There's 85 strong down there in Bloomington and across the nation with Advanced Trading, an employee-owned firm. And thank you, farmers. We're just a small company like you, independently owned, and we're rooting for you. Hey, if you like seeing this pretty face, switch your channel to RFD TV. Scott the Cow Guy and I are going to keep this conversation going. Don't forget to hit subscribe on YouTube, as you'll get more notifications like this. And we appreciate the business. Mr. Brian Basting, Bloomington, Illinois, ATI. Tom Grisafi, Valparaiso, Indiana. See y'all soon. Thank you, everyone.
Thanks, Tommy.